If you're watching this right now, I need you to pay attention because what I am about to share could change everything for anyone holding silver or even thinking about buying it. In the next few minutes, we're going to uncover why $150 silver might not just be a prediction, but a real possibility, and why almost nobody is talking about the supply crisis that's quietly building behind the scenes. Before we dive in, make sure you hit that like button. And subscribe to Silver Reset because this channel brings you the most important updates you cannot afford to miss. Trust me, staying updated could save you months, maybe years, of missed opportunity. Right now, the silver market is in a situation that most investors are completely overlooking. Headlines talk about prices, maybe a slight spike here or there, but very few are analyzing the real supply problem, the bottlenecks that could push silver from $95 or even $100 all the way to $150 in a matter of weeks or months. It's not hype, it's numbers. And when we break it down, it becomes clear why anyone not paying attention might get left behind. The first thing to understand is the difference between silver mined and silver actually available to investors. Mining has increased in some regions, but the global refining capacity is stuck. Refineries in the US, Europe, and even parts of Asia are operating at limits or facing shutdowns due to energy crises, labor shortages, and regulatory issues. This means even if miners are digging out silver, it's not making it to the market fast enough to meet demand. And here's the kicker: demand is not slowing down. Retail investors, ETFs, industrial buyers, and central banks are all competing for the same limited silver supply. Silver Reset has been tracking these numbers closely, and the data tells a very clear story. COMEX, which most traders watch, has recently seen record delivery numbers, yet physical silver in warehouses is dropping fast. Think about this. Tens of millions of ounces are being delivered, but inventories aren't keeping up. This is the classic setup for a price squeeze. When supply cannot meet demand, prices move fast. And historically, silver responds to shortages more violently than gold, because it is both an industrial metal and an investment asset. Now, some of you may be asking, why hasn't the price already jumped? The reason is subtle. A lot of market participants are focused on the paper markets, where contracts can be settled without physical delivery. But for real silver stackers, the story is different. Physical silver is being snapped up in the US, China, and India, creating a three-tier market where premiums are rising in Asia while the US stays relatively cheaper. This disconnect doesn't last forever, and when it corrects, the price adjustment could be sudden and sharp. Let's break down the numbers further. Shanghai silver premiums have been climbing steadily, recently hitting highs we haven't seen in years. India is following suit, with premiums above $8 per ounce, meaning physical silver there is significantly more expensive than paper contracts in the US. What does this tell us? It tells us that physical silver is in demand globally, and any investor hoping to buy cheaply may soon find themselves paying much higher prices if this trend continues. And it's not just retail investors driving this. Big institutions and hedge funds are quietly moving silver around, positioning themselves for what many insiders expect to be a huge squeeze. The delivery failures, warehouse shortages, and rising premiums all point to the same conclusion. The market is tightening. When you have limited physical supply and rising global demand, you don't just see a price increase. You see a rapid escalation that catches even experienced traders off guard. Here's where timing becomes critical. If you've been watching Silver Reset, you know the channel has repeatedly warned about these supply bottlenecks and the potential for dramatic price movement. Now, with recent COMEX data showing unprecedented delivery numbers and Shanghai premiums breaking records, the conditions for a $150 silver scenario are not hypothetical. They are very real. Every day that passes, the squeeze potential grows stronger, and the window to position yourself optimally might be shrinking. Let's also consider industrial demand. Silver isn't just an investment metal. It's vital for solar panels, electronics, and medical devices. As global industrial recovery continues and green energy demand accelerates, industrial consumption of silver is likely to rise. Combine that with retail investors stacking and institutional positioning, and you have the perfect storm where supply constraints meet explosive demand. This isn't a distant scenario, it's happening right now. But here's something most investors miss. It's not enough to just buy silver. You have to think about timing, storage, and premiums. Buying at the wrong time or relying only on paper contracts could mean paying a higher cost later or missing out on the physical squeeze. This is why channels like Silver Reset emphasize both market analysis and practical advice for investors looking to secure physical silver before the prices spike. Watching trends and understanding delivery schedules can make the difference between average returns and extraordinary gains. So, what should investors do today? First, stay informed. Check supply numbers, warehouse reports, and premiums in major markets. Second, consider diversifying your silver holdings. Physical, ETFs, and mining stocks all have different risk and reward profiles. Third, act sooner rather than later. When a squeeze begins, it often moves faster than most expect, leaving latecomers paying much higher prices or missing out entirely. We've also seen repeated patterns historically. When premiums spike overseas, U.S. markets eventually catch up. The lag between regions creates an opportunity for early movers. Silver Reset has been tracking these patterns for months, and the signals are flashing. The next few weeks could be critical. Watching quietly is no longer an option if you want to position yourself before the $150 mark becomes reality. Remember, the silver market doesn't follow headlines. It follows supply and demand. And right now, supply is tightening in a way that could trigger one of the most dramatic price moves in years. For anyone skeptical, look at the delivery numbers, the warehouse inventories, and the rising premiums globally. The data doesn't lie. Before we wrap up, don't forget to hit that like button and subscribe to Silver Reset if you haven't already. It's not just about following a channel. It's about staying ahead in a market that can move fast. And if you found this video valuable, drop a comment below telling us what you think the 150 silver scenario might look like for investors. Sharing this video with friends who stack or invest in silver could make a real difference. They need to see this too. In conclusion, $150 silver is no longer a distant prediction. The combination of tightening supply, global demand, industrial use, and institutional positioning sets the stage for a significant move. Watching from the sidelines without preparation could mean missing out on one of the biggest opportunities in recent market history. Stay informed, stay positioned, and most importantly, stay ready, because the next move in silver could happen faster than anyone expects.